Hello everyone, this is Nick Perry with your chart slideshow for Wednesday, September 20th. Today I am back with my weekly check of the broad market indices. Today is of course the FOMC decision day, and I debated whether to go ahead and do this now before the announcement or wait until afterwards and sort of check in on what had happened. I decided it made sense to go ahead and post these now before the announcement, with the understanding that perhaps I may need to come back and revisit these charts if we get a surprise announcement or a surprise move out of the market. So we'll go ahead and take a look at these today, see how they stand ahead of the announcement, and if need be, I'll post some updates in the blog to sort of fill in on what happened. When I looked at last week's charts, we basically saw that the uptrends were still intact. The SPX and the Dow had both pulled back to test support and had bounced off of that, while the comp was breaking above resistance and the rut was continuing its sort of slow creep higher. When we turn to this week's charts, we see that pretty much that same picture has continued. The uptrends are still intact. The SPX and the Dow have now rallied up into potential resistance from their former peaks. Earlier I noted that the SPX had ticked to a new annual high, but it's only a minor tick. It would take more than that for me to consider this resistance zone busted. As far as the comp goes, we see that it did pull back and tested that former area of resistance as support, and now we see a bounce higher off of that. As far as the rut goes, we see that this uptrend remains intact. The slow sort of creep higher that's been pushing towards this resistance zone at 740. This area rejected the rut on a bounce attempt here and here, and now we see after consolidation just below it, push up into this zone. One of the things that I said last week, talked about this sort of rounding pattern here amid the longer term uptrend. That's still in play as far as I'm concerned. Again, we've got to watch how it handles this resistance. A firm rejection here would be a mild setback. It would take a break below this zone here for the consolidation pattern to be broken. But for now, it looks like the action is still constructive. As far as overall takeaways, the uptrends still appear to be intact. We're heading into the FOMC decision with the SPX, the Dow, and the comp showing overbought readings. I would consider that a mild concern, but like I said, we've got the comp above support here. The SPX and Dow are testing resistance as they're overbought. So if we do see a sell-off on the FOMC decision, that it would take more than a minor sell-off to break these uptrends. In fact, we've now got these support zones here well below, so potentially we could see a pullback to those areas, which would bring the indices right back to their 50-day moving averages without breaking these uptrends. So we'll see how the Fed comes out today, see if they match everybody's expectations in holding interest rates steady, and I'll take it from there. Stay tuned to the blog for further updates.